Okay, good morning, everyone. Thank you for joining me today for today's episode of the Market Snapshot. My name is Noba Kiza, and I'm going to be taking you through what we currently have in the markets. So, for trading today, before we start it off, I just want us to go through the pricings for the market as of today's Euro session. So again, this is the last trading day of the month. So we expect to have a very volatile day today, especially going into the US session. Looking at the metals and the commodities, most of them are trading higher. Gold again is on track to have its highest monthly close in history, where it's currently trading at 2,522, and it's likely that gold most likely is going to close today trading also at these levels. Silver has failed to break $30 an ounce for quite some time. But of course, hopefully today is the day when we see silver trading above $30. Euro USD, GBPUSD, most of those pulled back from their weekly highs and monthly highs, and of course even quarterly highs. So I'm expecting to see how, of course, how they trade in today's session. Crypto is also trading relatively mixed. We have Bitcoin still, of course, failing to stay above $60, currently trading at $59. And I think we should expect to see some weakness there. One of the reasons why we are seeing weak crypto is because of limited volumes of trading, especially on some of the ETFs that were recently launched, and we should expect to see, a bit of limited price action there for the cryptos. Now, let's quickly go over today's PCE. So today we have PCE data. The PCE, of course, is the Fed's inflation gauge because it focuses on the important items that are normally spent on by American households, and it is used to track the increase of those particular products. And of course, the Fed, of course, focuses on this particular economic indicator to gauge how inflation has been performing for the US. Now, if you look at the PCE reading for the yearly basis, you'll notice here that we've actually had a declining PCE metric coming down gradually from highs that it had around 2023 when we had that resurgence of inflation. And of course, it had at a certain point reached even as high as 8%. That was around the time when we had the great inflation of 2022. Of course, around the time when we also had the Russia-Ukraine crisis. So, of course, that drove up a lot of prices, and we have seen a steady decline on this PCE index. And of course, currently markets are expecting that we have again a decline on the yearly basis from 6 point from rather we have the it coming in line with expectation, rather coming in line with the previous, that's at 2.5%. And of course for the monthly reading, we're also expecting it to come in at 0.2%. Again, if we, of course, indeed, if we get these readings coming out at these levels, that should be bearish for the dollar, and we should possibly see a strong close of the month for pound dollar and for euro dollar. So I'm not expecting us to have very high PCE numbers. Most likely they're going to come in relatively low or in line with expectation. Now, the other thing that we also have today, of course, is the Michigan consumer sentiment, which of course is going to give us some insight into how consumers are perceiving the prices of goods and services. And of course, we'll also be looking at the consumer expectations and inflation expectations. But of course, the main data for today is going to be this PCE data, and we'll have to be focusing on it to see how it affects the markets. Now, quickly, just to go to this article from ING, we are going to read through it to see what they are talking about here. So, again, today uh, we have data coming out for the PCE, and the first article is for the 30th of August. So, it's reading here that the latest bunch of US data has confirmed widely established notions. The US started the summer with a strong economic momentum. Yesterday, of course, we also had the GDP data. The GDP data is one of the reasons why we've had a weak euro and weak pound. The GDP pushed higher from 1.4% to 3%. And of course, that indicated that the US economy is looking quite strong, despite us having a few, economic releases that have given us a gloomy picture. The economy is looking very, very strong for the US there, based on that recent report we got for GDP. However, they are saying, but this inflation was equally happening at a decent pace, which is good. Again, we've not been seeing a very, very sharp disinflationary trend for the US. It's just really, really slight, which of course comes as a sign that the US economy is not slowing too quickly. And it could also be one of the reasons why we have a very, very high, index price that is for the Dow Jones. So the Dow Jones usually performs well whenever we have strong GDP numbers. And yesterday we saw the Dow Jones breaking record highs, moving as high as 41,500. So it's saying, yeah, the core PCE revision for Q2 from 2.9% 2.8% is encouraging and suggests we should get an even lower historical monthly profile. Today, the core PCE figure for July is expected at 0.2% month over month. An economist call is in line with the consensus. The Fed has shifted the focus towards the employment side of its mandate at the back of greater disinflation confidence. And our view is that both FOMC preferred measure and CPI data will keep building that confidence. Yeah. So again, if you look at the probabilities for rate cuts from the Federal Reserve, or probabilities for easing, at this point in time, we have 100% probability that the Fed is going to start easing. And at the moment, looking into the September meeting that we have next month, currently markets are looking at a 67% chance that we get one cut, the first cut from the Fed. And of course, markets are looking at a 25 basis point rate cut. And this is close to it's going to happen. We're definitely going to get the rate cut coming in from the Fed, and all this is because in the recent remarks we got from Jerome Powell, he indicated one that it's that the time for cutting is soon, and he didn't really mention that exactly, but based on his remarks, he indicated that it's soon going to be time to adjust policy. So what Powell said was adjust policy. So of course, by him mentioning adjust, the time is right to adjust policy, translates to definitely cutting rates. And that, of course, is because of a number of factors. Now, continuing to read here, it's saying that the dollar does not appear in a position to trade much lower in the very near term. The market's conviction on a Fed easing led to its own dovish tilt. Again, this is true, guys. If you've been looking at the DXY, you notice that DXY has been trading relatively bearish for quite some time. If you look at this trend, you can clearly see we have been in a bearish trend, and this shift to for us to see a weaker dollar is in line with expectations of change of policy, that is from hiking rates to now possibly changing to cutting rates. So we are seeing how the market is pricing that in, and we are seeing a relatively weaker dollar. Now again, I agree with ING, the ING team here, because they are indicating that in the near term we likely will see a relatively stronger dollar. I suspect that is true, based on how far down the dollar has sold. I'm not saying the dollar is going to shift to buy strongly, but we are going to have at least a temporary relief rally of sorts for the USD, which of course in turn would mean that we'll have a weaker euro and pound. So they are saying here that we have seen this as a consolidation week for FX, and the proximity to Monday's Labor Day. On Monday we have a bank holiday for the US. So again, what that means is that we might see a bit of limited, trading going into, especially on Monday. But for trading today, being the close of the month, we are going to see possibly some good rallying for gold and for euro dollar and pound dollar, and also for the indices. So going over to maybe other parts of this article, I want to go maybe to inflation in Japan. So again, Japan's inflation data came out recently, and we have seen that dip on inflation. If you look at where the USDJPY is trading at the moment, you'll notice that USDJPY first, we've been bearish on USDJPY, based, of course, on the kind of technical setups that it has. It's been looking quite bearish. And of course, all this on one hand has been because of the rate cuts, the rate hikes that the Bank of Japan has taken. They took one in April. They took another one. The first one which they took was a rate hike of 0.1%, about 10 basis points. They did another one of 0.15%, which is about 15 basis points. Currently, their benchmark rate is at about 0.25%. So from the recent remarks we've gotten from Bank of Japan, they are indicating that we're likely going to see more rate hikes coming. And of course, now there has been a bit of normalization of price action. We are not seeing a lot of fear. If you look at how the Nikkei is trading, you'll notice that the Nikkei, first of all, of course, has had its biggest period of consolidation in a long time. Looking at Nikkei's price action, previously we've been having the Nikkei in a sharp buy momentum up until the time when the Bank of Japan acted by cutting rates. Now, soon after they said cutting rates, we then saw it getting into a consolidation. So if you look at the Nikkei, you'll notice that we've actually been stuck in such a range for some time. Okay, and the steady increase but choppy increase in this index is indicating to us that that market turmoil that was there at the start of the month was just as a result of fear. Okay, and also the rush for investors to get out of their credit arrangements. For those that had borrowed at negative at zero rates, they had to quickly get out of those arrangements because most of them were in fixed interest arrangements. So it's not rather in yeah they were in floating interest arrangements. So when interest rate increases, it means that they are going to pay more for their debt, even if they have borrowed during periods of close to zero rates. So all that is what caused that sharp move. But you can see how the Nikkei is steadily recovering. And of course, all this is because we are not seeing that much turmoil right now. Now, still again, basing on what we are seeing here, the Bank of Japan is still very hawkish. I agree with this, and that's why we can expect to see a weaker USD/JPY. And of course, if you're trading other pairs like GBP/JPY, you can also expect to see a bit of weakness there, since of course Bank of Japan has decided that they are going to go ahead with switching policy. And yeah, so let's just read quickly through this. So they are saying USDJPY did not react negatively to the inflation surprise in Japan overnight, but the release does have some relevance from a Bank of Japan perspective. Tokyo CPI for August accelerated from 2.2% to 2.6% against a consensus of 2.3%. Again, guys, this inflation reading was supposed to be rather bearish for USD/JPY currency pair, but it's looking a bit unchanged. But again, if you look at the trend, USD/JPY is mostly bearish, and of course, this is based on the trend. Yeah, so back to this, we are saying we could see why there's a reluctance to chase USD/JPY lower before clarity on the US core PCE, and considering how much easing is already priced into the USD OIS curve. However, we think that markets are still underestimating the chances of another hike by the Bank of Japan before the end of the year, with only 8 basis points priced in by December. So again, guys, what ING is indicating here is that first of all, the Bank of Japan has already delivered about 25 basis points worth of rate cuts so far this year, and they seem to be indicating that there will be a bit of a slow decline for the USD/JPY, because the market, first of all, has priced in the rate cuts that are going to come from the Federal Reserve. But in addition to that, the economic data we've been getting from Japan has not affected the yen so much. Whenever inflation comes in higher, it's supposed to be bullish for the currency, especially if the inflation does not increase at a fast pace. It normally means that the real value of the currency increases, which of course should allow us to see a stronger yen, but that is delaying. And of course, the reason for that is that the Bank of Japan is not expected to hike rates soon. And that, of course, should mean that if you're selling USDJPY, try and be a bit cautious, because they could likely be recovery for the dollar, and a strong recovery, especially going into September, and possibly even into October. Okay, yeah. So I think with that, let's cross over to the MT5. If you have any questions whatsoever, you can send in your questions now, and I'll be able to handle them as you are going along. So let's cross over to the MT5 to go over the rest of the charts. So we are going to start with the indices. So let me just start with US30. So for US30, this is what we currently have. US30 has been able to get to its all-time high, which is around here. It's currently trading quite bullish, and of course, the reason for this is because of the recent GDP number we got. And of course, there are a number of components, especially the consumer staples, that are performing well because of strong economic data, and of course, improving, investing climate and business climate for a number of these companies. So they seem to be performing well. Now, I'm expecting Dow Jones, from today's PCE number, we could see the Dow Jones having a slight decline on slightly higher PCE before moving higher towards these areas of 41,000, possibly 47,000. So I'm quite bullish on the Dow, and we're still inside this demand base that would possibly see us rising higher. Now, again, we also have a golden cross down here. So this golden cross is quite good, and of course, it is it's a very good trend indicator that this trend is very, very bullish and could still continue being bullish. Now, crossing over to the Nasdaq. Of course, the Nasdaq, I remember we had a buy setup for it. That was a falling wedge. The falling wedge setup, I think I drew it before the NVIDIA earnings. So just to speak briefly about NVIDIA, NVIDIA declined from the earnings. And first of all, NVIDIA had an earnings beat. The forecast for NVIDIA was about 28 billion. That was the estimated forecast for their revenue for Q2. NVIDIA reported about 30 billion in revenue for Q2. Which of course was a very strong, I would say. It was an earnings beat. It was of course a good report. Maybe an increase on revenue by roughly about 3% from the previous quarter. However, the only thing that was gloomy about NVIDIA's earnings report was the fact that um, their gross margin declined. So NVIDIA has a lot of capital expenditure. So they are putting money down for products. They are putting money down for revenue, for research and R&D. So all of that is eating into its gross margin. So what that means is that people are starting to fear that, will it, first of all, will it keep up with the pace of growth? There seems to be some kind of slow growth that it's having with its sales, with the revenue. The other thing also is that during the earnings call, uh, NVIDIA indicated that their revenue for Q3 is likely to be around 30 something billion. So now, if you have revenue, if they have had revenue of 30 billion, and then their Q3 revenue guidance is that it's going to be around 32, 33, you're looking at a very, very slow increase in growth. Now, the other issue, and of course, why we also saw a sell for NVIDIA from the earnings, was the product. So they were supposed to release one of their top products, which is called the Blackwell. There's a Blackwell machine, it's a computing machine, and they had indicated that they were going to have this released around by this time this year. That was in Q1, around March. That's when they said they were going to release. They said it was due for release around this time of the year. They haven't released it, and they're indicating that by end of this year it's going to be ready. So by looking at how the revenue numbers are for NVIDIA, and looking at the fact that some of their most demanded products are not yet out, is putting investors on tension that, you know, maybe we're going to have a period where Nvidia might go into a sell, which of course will hurt the stock. Yeah, but that does not mean it's not a solid company. It's solid, and I believe we just have to wait and see what happens. Now, we also had some stock price targets from Wall Street that were also released yesterday, and a number of these asset managers were targeting that Nvidia could possibly reach as high as $150 over the course of the next few months. So it's now a matter of time to see what happens. But this sale that we saw for Nvidia affected the Nasdaq, and that's the reason why we did not get that much of a move from the earnings. So you can see how there's a bit of a dip from the earnings report, and either we are going to sell a bit more or we are going to possibly keep in this range. Now, despite Nvidia's performance, I'm not expecting Nasdaq to sell too much, simply because we have the other Mag 7 members like Apple, Tesla, which of course are doing quite well, and this should possibly propel the Nasdaq today. We'll most likely see Nasdaq trading upwards of 20,000 towards those areas of 20,200, 20,300. So I'm keeping an eye on how we're going to perform today. I've drawn some kind of a pattern here. So Nasdaq is looking like it's about to break this area here to possibly move to the upside. If indeed we do break it from PCE, then we're going to be looking for a breakout on a Nasdaq that could take it towards this fib level around 19,882. If of course we take out and break this structure here, then of course the next target for the Nasdaq is going to be to trade around 20,700. So keep in mind, guys, that Nvidia does contribute to this index, but it does not mean that a weak Nvidia price or price action is going to affect the Nasdaq, because there are other components within it that also contribute to the overall price for this index. Now, let's cross over to gold. Now, for gold, how I've seen a number of traders complaining about gold's price action, but what I can say regarding gold is that gold needed for you to change your approach to it, especially since it has been trading in a range. Gold has been trading in a range. Meanwhile, for most of you that may not have observed this, it's been trading in a range since I would say since the 19th of August. We've been bouncing off these levels. That's around 25,030, 25,025, 2,525, 2,530, 2,520. We've been selling from those levels. Now, the persistence of gold, especially at this level, means that we are likely to see a break for gold above this area today, possibly trading towards 2,540 by close of trading later today in the US session. Now, gold is on track to have its biggest monthly close in history because it's trading at record levels at the moment. It's getting ready for a breakout that could take it today along those levels. Now, the approach for trading gold before was to have sell limits above around this area here, whereby if gold were to break around 2,520, you'd be looking for sales to be triggered around here back to this area of demand. And you can see we had a sell for gold back to this area, picked up liquidity, pushed back up. Same thing here, picked up this demand slightly below that 50-day moving average, then pushed up again. So I'm still bullish on gold. You might buy it here, have a relatively tight stop loss down around 25.10, 25.13. But if you're to buy it here, you're going to be aiming to take it all the way above that level towards 2,540. Now, looking at GBPUSD, same thing also. It had a bit of a temporary pullback. Again, guys, this was this of course had to happen. The GBPUSD has been rallying quite strongly over the almost since the start of the month. I mean, from the 9th of August, which was almost like 8 days into the month, we've been on such a rally for the pound dollar. However, today from PCE, I'm expecting pound dollar is going to have a monthly close that is above yesterday's high, which should put it around here. That is by trading, end of trading today. The PCE number is likely not to affect the dollar too much. So we should see slight move to the downside after the release of the earnings, and then rather after the release of the PCE report. And then soon after that, we should possibly see a move higher for the pound. So what I've drawn here, for those of you that might be wondering, this is an asymmetrical triangle, and the symmetrical triangle is normally at a neutral pattern where you expect the market to either buy or to sell. Now, in this case, I'm expecting it to buy simply because I see an imbalanced candle where where I think the buyers are seated, which is slightly above that 23.6% fib level. So you can see this imbalanced candle was created from the 23rd of August. We saw a move to the upside. Then we saw a slight drawn liquidity along this level here. And soon after that, again, you can see how we picked buying momentum, and now we are ranging up here. So there could be a slight retest of the demand base today before we have a move to the upside. Now, crossing over to Euro USD. Euro USD had a very nice setup yesterday. We had what I can call a bearish flag here. We had a slight break below that bearish flag, and of course, even with Euro USD, we have also picked up. We have picked up demand along this area here. So you can see this imbalance candle that was created on the around the 16th of August. We have just had a slight break into that area there. So we should see a potential move possibly from here, because this is where I'm thinking buyers are seated. I had previously thought the buyers were seated around here, but you can see we broke that level. That was on the just I think 28th of August. We broke that level and sold. We had a drawn liquidity around here, and now I think we are buying back up. So from here, if of course the PCE number comes in unchanged, that should support Euro USD to advance back to this level of the fib. I'm not expecting it to move back here, but there should be a slight move to the upside. Now on Monday, it's a bank holiday for the US. So the bank holiday for the US implies that banks are going to be closed, and so volumes will be very, very slim. So that should allow, that should buy some time for a move higher for the Euro USD and for GBPUSD. Okay. Yeah, so I think that's it from my end. We can now go over the questions. If you have any questions, we can go over the questions. You can send in your questions, guys. Trafscape, how are you doing? You're saying, is it safe to trade today during the last Friday of the month? Yes and no. On the yes side, it would be good to trade today if, of course, the markets will never be the best environment. So the best way for you to approach it is by having very, very strict risk management rules that you're applying when you're trading. So if you feel maybe there's where you feel there might be a bit of uncertainty, use very tighten your risk management rules so that you do not risk too much. So that you can trade. Again, also on the yes side is that we have PCE. So the PCE is going to give us some good moves today. If the PCE comes in lower for the dollar, we should see a sharp move higher for the euro towards that area there of 1.11200. Let me just get my screen shared. Okay, so we are going to see it possibly moving to that area there. So same thing also for the pound. If again we see a good PCE number, that should support it to also move higher. Yeah, so all that is really, there are going to be some good moves with, of course, the PCE number. Next question. I got this news from ING. Okay, so ING think they usually have reports that are released by their economists. So I normally get the reports from there. So you can just search up ING online and you'll be able to get their reports. So they have very, very detailed reports and you can use those in your analysis. Pay of the day, I think for me would be XAUSD. XAUSD, we are going to get some good moves today. With a PCE number, we might get a slight pullback before we have a move to the upside, just like the ones we've been having here. So it might first do this, then again it buys. Did the same thing here. You had sell limits around 25.20. You are in the money definitely. Move back up. Again, the same thing here. Move back down. Then of course a slight move back up before we have a slight move maybe down from PCE. Then we have a break to the upside, for that monthly close taking us towards those areas of 25.40. So yeah, so let me just repeat myself. My chart had gone. So this is a 25. We had a sale here from 25, around 25.20, back down, move up, back down, move up, back down, move up. So we should see a slight pullback from PCE, and of course we see gold breaking towards those areas here of 25.30, possibly 25.20. Of course, indeed, if gold again does not move up here, I'm expecting it to tap back into this area of demand, which is around this area here of 2490, 2492, around there. Awesome. Is imbalance candle same as FVG? No, 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 no. They are different. So imbalance, we have what we call CB and BC. So CB is buy side imbalance, and sell side inefficiency, and then we have sell side imbalance and buy side inefficiency. So whenever we have big blue candles, if you see me with big blue candles, that means that we have a buyer imbalance. So it means there are more buyers in the market at that point, and that could support the case for a buy, especially when we have liquidity grabs within those areas of where the imbalance candles are at. Okay, so you can do some chart studies for this kind of approach for the market. Like you can see here, we had a move for gold. We had a big imbalance candle that was created around here of almost 300 pips. Then, of course, we also had a sell into that zone, grab on liquidity, and of course the buyers there. So I usually look to have my demand bases drawn around those areas of imbalance for me to look for buys. Okay, I know FVG is a good concept, but I don't really use it that much. But if for your information, if you want to know what the FVG is, just a fair value gap. So again, whenever the market has an imbalance that is created at certain point, there's normally a gap that is there in the market, and of course you expect that there's going to be a tap within or a move back down to come and fill that gap before it moves higher. So again, that is also a concept that can also be integrated within your technical analysis. Awesome. So I hope that helps, Thomas. Yeah, so gold, again, just to repeat myself, I think I've covered gold. This is like the third time. So for gold, it's quite clear. We have demand for gold around 2490, 2500. It's been buying very nicely from those levels. I think you saw it from here. We had a move to the upside, came, tapped into this demand base here, moved back again. So I'm expecting buyers to push gold today. We have been having several imbalances created for gold over the past few weeks that have allowed it to have a very, very strong bullish uptrend. Again, if I were to draw a line like this again is a minor support line for gold, a major support line for gold on a H4 time frame, indicating to that gold is very, very bullish, and this could possibly support gold to move towards the upside. Analysis for gold for today, I'm expecting and keeping an eye for a break of this level here for us to see gold reaching as high as 2530 and possibly 2540 after the release of the PCE. All right, guys, I think that's it for today. I thank you so much, everyone, for tuning in for today's episode of the Market Snapshot. And I wish you guys all happy trading. Someone is saying I can't find the report. So the report is here. Let me just show it to you. So what you're going to do is, okay, now you're going to have to sign up for, you can sign up for their newsletters. So for me, I get their newsletters every day. Okay. But just search for ING. Search for ING online, and then you'll be able to get their reports. So they are free, and you can be able to read through them. They are technical reports, but of course, they are very, very good for trading. What do they mean by the terms volatile, consolidating? Consolidating is where the market is unchanged for a certain period. There's no movement. It's not moving up too much. It's not having a definite move to the upside. It's not having a definite move to the downside. It's just range bound. It's staying in a tight range, okay, with of price action. When there's volatility, we tend to see a more sustained move in one direction, either up or down. So that's when we talk about volatility. All right. All right, guys. Thank you so much, everyone, for joining for today's market snapshot. I wish you guys all happy trading, and I'll catch you guys again for another episode next week. Cheers, guys, and all the best.